So very good evening. So in this session we are going to start with new chapter called as mutual funds. So with regard to this chapter mutual funds, first let us see the learning objectives. Before going into that, marks weightage of mutual funds in exam will be running from 6 marks to 10 marks. Don't expect 18-20 marks from this chapter, small chapter only. Comparatively this will be the smallest chapter in our entire syllabus, but important for exams because compulsory one question will come in exam. That can be 4 marks sometimes, 6 marks, 8 marks, 10 marks. So one question you can expect. Maybe if your horoscope is very good on that day, 2 questions also may come. In general, one question definitely will come. 6, 4, 6, 8, 10. This is the weightage of this particular chapter. Okay. Next, mutual funds chapter will be accounting for 6 marks or 10 marks here in this particular area, and moreover understanding the mutual funds require understanding of the portfolios as well. Not completely, 1 or 2 topics of portfolio will come. As and when it comes, I will explain again here. Clear? Huh? We completed portfolio. Even then if you didn't cover that particular area, I will again re-explain that concept here to the extent required for this chapter. Okay. So mutual funds as a chapter, what are all the learning objectives? Let us try to know about them. Open your notes. First write down this. See the screen once. What are the learning objectives of the mutual fund? First one is understanding the mutual fund, net assets value calculation, yield or return, types of mutual fund plans, performance measures, types of strategies, mutual fund expenses, miscellaneous concepts. Okay. Please write it in the notes. Have a clarity on learning objectives first. Every question we have to do in the notes again. Write down learning objectives. Copy down this. Net gana. This is the third time power cut today. Okay. So these are all the learning objectives of this particular chapter. With regard to these learning objectives, first one, understanding the mutual funds, net assets value, yield or return to the investor, types of mutual fund plan, dividend reinvestment plan, bonus plan, growth plan, and finally the concept of performance measures, Sharpe ratio, Trainor ratio, Jensen's alpha, investment strategies, passive buy and hold, constant proportion portfolio insurance, mutual fund expenses and miscellaneous concepts. These are all various topics applicable in this chapter called as mutual funds. As I said already, this chapter will account for around 6 to 10 marks in exam, 4 to 10 marks in exam. Okay. First, let us understand how a mutual fund actually operates. Once we understand the operations of the mutual fund, okay, then we will start doing the problems. Today, we are going to focus on calculation of basic NAV calculations. But before going into that, listen, 90% of the mutual funds chapter means any question you take, it will be talking at the end of the day about NAV. It will not say anything except NAV. Okay. First, let us understand how mutual funds actually works. See here. There is a person. This person has limited funds. With his limited funds available, he wants to become owner of 5 different industries. He wants to become an owner in software company like TCS, Infosys, etc. He wants to become an owner of pharma industry like Dr. Reddy's, Cipla, etc. He wants to become an owner in infrastructure companies like L&T, GMR, etc. He wants to become owner in power sector like Tata Power, etc. He wants to become an owner in automobiles like Tata Motors or Force Motors, etc. Like this, you take the industry, a person wanted to become owner of all the companies. Okay, or all the companies, at least one company from each sector. Means he want to put money in software, he want to put money in pharma, he want to put money in infra, he want to put the money in power, he want to put the money in automobile. Say example, my fund availability is 20,000. Software company like TCS I want to invest 3,500. Okay, 3,500. Say for example in pharma I want to invest in Dr. Reddy's. Say for example 800. Okay, infra I wanted to invest in a company like L&T, etc. 1,500. Examples. Okay, next I want to invest in power sector, like I want to invest in Tata Power, say for example 600. And next I want to invest in automobile, I want to invest in Force Motors, each share is costing around 20,000. Eicher Motors, Force Motors, all these are very costly shares. Listening, say for example it is 10,000. Now you observe, my money is 20,000 available, I wanted to become a owner in all the sectors here. Okay, number 1, 10,000, 13,500 plus 14,100, 15,000, around 16,000 almost, 16,800. Technically, how much I have to spend? If I spend 17,000, I will get 1 share. 1 share of what? Each company given here. Are you understand the point or not? That means how much money I have to put in order to become decently a good amount of shareholder of these companies. If I want to buy, say for example 100 shares of each company, how much wealth I need? Did you understand the point or not? Technically I need 17 lakhs. Is it possible for a normal person to invest 17 lakhs in these industries? No. That means the problem is I have a fund availability which is very much minimal, but my wants are many. I want to invest in various companies and I want to diversify my risk. Okay, why we should not put all the eggs in one basket? There is a saying, na, my money I don't want to put only in pharma. If pharma fall, what should I do? Invest in infra. Infra fall, what I should do? Invest in software. For software is also falling. Invest in power sector. All the sectors are falling. Even then I can save myself. Invest in Nifty directly. Are you understanding or not? So therefore, in order to diversify the risk, people started putting their money in various places. But that putting money in various places may not be possible for small investors. Means a fund availability of 5 lakh, 10 lakh can't do all these stunts. Am I clear or not? Because decently Nifty is there, na? Nifty totally 17 sectors are there. Like this: software, pharma, infra, power, automobile, entertainment, oil extraction, petroleum, petrochemicals. Like that, if you take a list, how many segments are there? 17 segments, 50 companies. Technically, each segment 3 selection will be there. Are you understanding or not? Three companies will be selected in each sector. Telecommunications 2 companies. Airtel, Jio. I mean Reliance Telecommunication. Like that. Every sector how many will be selected? 2 will be selected. Or sometimes 3 will be selected. 17 segments 50 stocks are there in Nifty. Listening? If I can invest in all the 17 sectors, my risk will be 0. Not 0, risk will be minimal at least. Do you know why? Even if one company inside that doesn't give the profit, I can get the profit from other sectors inside it. So therefore, people want to diversify their risk. But is it a joke to invest in a Nifty directly? 50 stocks are there. One share if you buy, you require 28 lakhs today. Are you understanding the problem or not? You have to have around 20-25 lakhs in order to do that. Ain't you? One share in each segment again. Because in that MRF also will be there. One share 1 lakh. Are you understanding or not? Like that 50 stocks. How many? 50 stocks. On an average, 2000 if you take, it will become a huge amount for us or not? 50 companies. 2000 means how much amount you need to put in. So, huge amount of capital blockage will be there. Normal person cannot. Even you and me also cannot afford to take the decision. For them, the destination is mutual funds. How it work? Let me first explain you. Mutual funds, there will be 3 parties. Very, very important also to understand income tax. Income tax, taxation of mutual fund will be there. Which one? Taxation of mutual funds. At that time, these concepts will help you a lot. Let us understand what is a taxation of mutual fund later once we understand the concept. See here. In a mutual fund, 3 persons will be there. I am talking from the fund point of view, 3. Other than investor, 3 persons. Number 1 will be sponsor. Who is he? Sponsor. Number 2 is manager. Number 2 is a manager. Number 3 is trustee. 3 persons will be there. Number 1, sponsor. Number 2, this manager we call AMC. What is AMC? Asset management. So let's begin. Let's continue. I think no power cut will disturb us now. Shall we continue? Where I am, what I am telling? Sponsor. See there are 3 very important persons. One is a sponsor. Another one is a manager. Also called as a AMC, Asset Management Company. And next one is trustee. So what is the role of all these 3? Let us first understand. Sponsor is a person who starts the mutual fund. We properly, if you have to understand, in a company he will be like a promoter. How promoter is for a company? Sponsor is for a mutual fund. Listening? Okay. Sorry, first point number 1. Do you know what is a Trust under Income Tax Act? Illa. Do you know what is a trust under Income Tax Act? You done tax audits this year. Tax audit, trust audits you have done? No one. Literally your office don't have any trust. Your office the trust are there. Trust is there. Have you done any time? No, you didn't do. You have done trust? Never. Never in the life. No, you? Never. Never. Trust audit will be conducted when you have to file a form called as a form 10B. Now it was changed. 10B, 10BB forms came. Previously 12AA, 12-year registration. Now it is not there. It was totally gone. So we are the auditors for from one big university there. So we will see the trust audits. So trust audits, whenever you consider, so first we need to understand how a trust actually operates. Okay. So I will give you an example. Trust. What is a trust? Trust concept is not defined anywhere in any act except under income tax. That is not said under any other act. Even financial management law, SEBI guidelines law, nowhere it was discussed. The concept of trust is discussed only in one act in India, that is Income Tax Act. Clear? And even there is an act called as the Indian Trust Act. Indian? That does not apply to all the trusts in India. That's applicable only for a private trust. Only for trusts are of two types, private and public. Public law two types again. Public law. Normal public trust, charitable trust and other trusts. Private law again two trusts are there. Private specific, private discretionary. Clear? Public trust there is no act governing them. Trust deed has to be registered under Indian Registration Act 1904. There is no act for the trust in India. Properly no act is there except income tax. So let me first explain how a trust operates. See the screen. After that you can understand mutual fund. What is a trust? Trust is basically an obligation. Obligation to do what? Obligation to provide benefits. Provide benefits to whom? Specified persons. These specified persons are called as beneficiaries. Who will create trust? Guess the answer. Who will create the trust? Creator. Sal godave ledu. Who will create the trust? Everyone. Sponsor. Sponsor is also called as author. Who create the trust? Author create the trust. And cast the obligation on trustee. Sorry, I will explain what it is. See here, grandfather is in deathbed. Grandson is coming up for good earning. When he is in deathbed, grandfather called the grandson. He called him and said, okay, grandfather asked the grandson and he said, I have one last wish, will you fulfill? Grandson was a dutiful grandson. Dutiful grandson. Immediately he took very seriously. He said, yes, please order, I will do. He said that, feed, okay, 1,000 poor people every day in Hyderabad. Okay, this is my last wish. And he is about to die. Cinema will show na? Almost last wish they will tell fat after that. Next statement will not be there. Once I give that statement, take the oath, die. So he is about to die. He said that, Papa, your idea is fantastic. Feeding 1,000 poor people in Hyderabad every day, good idea. But from where? Where is money to feed them? 1,000 people every day Annadana means you can understand. At least it will spend 1 lakh rupee. Sir, if not 1 lakh, at least 50,000-60,000 I need to spend. Are you understand? At least 50 rupees it will take for each person. Na? Even if I take 60 rupees or 50 rupees for each person, it costs me 50,000-60,000 every day. From where I will get money? My salary is 1 lakh per month. Like that grandson said to grandfather. Grandfather said that, I said, provide service, provide benefit. I am not telling provide benefit out of your property. Then what grandfather has done? Author said that, I have one lawyer. Okay, I will call him. Tomorrow morning I will call him. I will write all my properties in your name. Immediately grandson said, really? In my name you will write, yes, as a trustee, not your personal property. Then why you are living? So he immediately said, okay, you are writing in the name of a trustee, so right, I will provide the benefits. This author will irrevocably transfer properties in the name of trustee. He said, near airport in Hyderabad, Shamshabad Airport, International Airport is there, na? Near to that, we are having 5 acres of fertile land. From that, every year agricultural income will be 1 crore minimum. You do one thing, that land, property, everything I will write in your name. You are major, na? I will write in your name as a trustee. From that money will come. Okay? That money used to feed these poor people every year, every day. He said that, okay, that is okay, fair deal. If not my money, I will feed. If you ask me to feed every day, means 50,000 2 days lagan. So I will definitely do that. So he said that promise on you. You go happily. I will check the remaining thing. Definitely I will do whatever you honor. Immediately grandfather also in a month or so he died. Properties came in the hands of grandson. He is a trustee. Trustee to the property. He is a custodian. Who? Trustee. Okay, grandson. Now, these properties are own properties of trustees are not the own properties are. These are not the own properties. These are the properties given by the author to the trustee to provide benefits, not to get self-benefited. Okay. These properties are popularly called under income tax as property held under trust. Have you heard this name? At least. Property held under trust. This is a property held under trust. From this property, income emanates. Income will come. This income is called as income derived from property held under trust. Okay. So technically to understand, trust is a obligation. Obligation to provide benefits. Benefits to specified persons. Specified persons are called beneficiaries. Who will create a trust? Author. Cast obligation on trustee. Trustee is the discharger of obligation. Trustee is the discharger of obligation. Author will not directly ask the trustee to do. He will irrevocably transfer the properties in the name of trustee. Irrevocably transfer properties in the name of trustee. Those properties are called as property held under trust. From that property, what will come? Income. That income is called as income derived from property held under trust. Okay. Whose income this is? Whose income this is? Trustee's income or trust income? Answer? Trust income or trustee's income? Trustee. Answer? Trustee. There is no separate entity called as trust. Trustee is not a separate legal entity to tax it. That's why we need one person who is the pratinidhi of the trust. Here pratinidhi yaru? So who is the pratinidhi of the trust? Trustee is the pratinidhi. So he will be the representative assessee. Who? Assessees are of 3 types. First one assessee, second one assessee in default, third one representative assessee. Section 2 defines assessee and assessee in default. Section number 160, subsection number 1, clause number 5 defines representative assessee. He karta, he trustees, all are taxable under 160(1)(5). Representative capacity, they are taxable. So what happens? This income will be taxable in the hands of whom? Trustee. As what assessee? Representative assessee. Listening? From where he will pay the tax? From this property money will come, na? From that property money only he will pay the taxes. Listening? Because trustee is a separate legal entity or not a separate entity? Not a separate entity. E partnership, HUF, trust, all these are not separate legal entities at all. You can't tax them. Listening? Then you will get a doubt now. If you really understand what I said. Sir, no sir, you said wrong. Income tax la partnership is separately taxable at the rate of 30%. Question will arise. What I said? Partnership is a separate entity or not a separate entity? Not a separate entity. HF is a separate entity or not a separate entity? In reality, partnership is not a separate entity. Listening, huh? What is a partnership? Sir, occasion came now I am asking. What is a partnership? Partnership? Partnership is a name given for the relation. Relationship ki name partnership. Sir, I will give you an example. Okay? Parent. Two children. Child 1, child 2. Okay? Who are they? To each other, who are they? To him, he is a children. Brother, I told male, female, I said gender. Brothers and sisters. What you should tell? Siblings. Okay, na? Tell me. These parents are having how many children? 3 children. Child 1, child 2 and sibling. Sibling is another separate person. Sibling is the name of a relation. Answer, yeah. That's a partnership. Two people coming to do business to make profit, share profit, we call the relation as a partnership. Partnership is not a third person. Partnership is the name of the relation. Activity of doing business together by sharing profits, by making profit is called a name of relation is partnership. How you said sibling? Like sibling, partnership. Listening, huh? For example, two people are batting in cricket. Okay. What we call them? They are called as a partnership. Partnership in third batsman. Partnership is a Mr. Partnership. Partnership is not a separate person. Partnership is the name given for the relation between two people. Clear? Partnership is a separate entity or not a separate entity? Now tell me. Me and him both together started a company. Now tell me, company is a relation name, entity. Company is an entity formed. Here, me, you and company, 3 persons are there. Me, you and partnership, 3 persons will not be there. Me, you, name of relation is partnership. Where separate entity is formed? Where separate entity is formed? Company like will be formed. In what it will not be? When partnership is not a separate entity, how you are taxing partnerships? Under Income Tax Act, partnerships are taxable or not? If it is not a separate entity, how you are taxing it? That's why income tax always creates fiction by the word deemed. By the word deemed. Those who have taken law from me at inter level, now you will understand very well. Why deemed? What is the meaning of the deemed? How deemed will really affect? Partnerships are not separate entity, but law has created a fiction saying that partnerships are deemed as entities. Really it is an entity. Sir, I will ask a question, answer. Loan is a dividend. Loan given dividend. Loan dividend. But yes, is it a deemed dividend under 222E? Why it is deemed? Because it's not a real, in reality it is not the thing. Loan is a dividend. World according loan is dividend. But income tax considers loan as a dividend by creating a fiction. Kalpitam. What is the kalpitam created here? Deemed. Are you understanding or not? Do you know when the deemed dividend concept came in Income Tax Act? 1964. 1961 Act when it was originally brought, deemed dividend concept is not there. CA inter law, foundation or inter, anywhere. Have you read one case law? Dinsha Manikji Petit. Separate legal existence, corporate will lifting off. One person will be there, created 4 private companies, distributed his wealth over 4 companies. Foundation. I said both the levels, that's why. That case law. Do you remember at least that case law? No. Even in that it will be there. I think it is not there. Companies Act is not there in that. Sir, you remember that? Then in inter you might have read. By the time you came to inter, this was gone. Okay. But still, this case law generally IT. Sorry, okay, no problem. In that case law, if you remember, those who come across through foundation, there they will tell like this. There will be a person called as Dinsha. That fellow started 4 private limited companies, distributed his wealth over all the 4 private limited companies. Okay. Why? At that time in 1960s, income in the form of interest, income in the form of dividends earned by companies are exempted from income tax. Exempted from? Why? To promote companies in India. At that time, not today. Today everything is taxable. To promote companies in India at that time, Government of India 1961 Act, they said, interest or dividend income earned by companies are subjected to tax or not subjected to tax. Therefore, what Dinsha has done, he used to have personal investment. He transferred all the personal investments to company. Now company generates what? Interest income and dividend income. Are you understanding? Then what will happen? Originally interest income and dividend income used to come to Dinsha. Now they will come to company. Company is subjected to tax or not subjected to tax? Answer. Now he is escaping or not escaping? No. Shall I tell you why? Company is a separate entity or not a separate entity? Answer. Previously asset is in whose hands? Dinsha. Now asset is in whose hands? Answer. Company. Exemption came to whom? Company. Income is in whose hands? Company. It is not in the hands of Dinsha. Now Dinsha has to get it back. How Dinsha has to get it back? That company has to declare dividend. If that company declare dividend and Dinsha take it, again dividend become taxable in the hands of Dinsha. Therefore, what this fellow has done, that company will give loan to Dinsha of the same amount. What that company will give? Loan. How much loan? Dividend plus interest income will be there. That much amount he will take as a loan, which he will never repay back. Why? That company formed by him. Therefore, at that time, Government of India has got a doubt. When I gave a chance for the people to get some benefit, they are cheating the government in turn. Therefore, they brought a concept saying that any dividend, okay, or any income which is taken by a person or a shareholder, individual assessee or a company or a resident individual, whoever has taken any kind of loan and who is having a substantial interest like 10% in the company, any loan taken by him to the extent of that interest will be deemed as a dividend under section 222E. Like that they brought. Dinsha is not a normal person. He created big sensation in Income Tax Act. Because of him only, that's why if you observe, 222E is the last provision in 222. 222 la A la bettach. You can put it in B, you can put it in C, you can put it in D. Why you put exactly in E? Because that came last. Originally when they made the provision in 1961, A, B, C, D, A. After that, because of this fellow, E added. Okay? Great people, Yandro Mahanubhavulu. So, sir, idea is very clear. Trust is a obligation to provide. To whom? Called as? Who create the trust? Cast obligation on? Trustee will be the discharger of obligation. Okay, he transfers the assets. Same thing. Now interchange the names, put mutual fund trust. Mutual fund trust provides is an obligation. Obligation to provide what? Benefits. To whom? Special persons. Called as what? Unit holders. Called as? Now tell me, who is the first person? Author. He will cast all the assets in the name of whom? Trustee. Trustee will safeguard the money given by the public. Money given by? Who will safeguard? Trustee. Trustee is the safeguarder of the money. Author or sponsor is the person who started mutual fund. Manager is the person who will manage where to invest, where not to invest, when to sell, when not to sell. All these things will be taken care by manager. Asset management companies we call them very popularly. AMCs will take care. Okay? See here once. So, see here. I am A. I have a limited fund of 10,000. But I want to become shareholder of 6 to 10 companies. Like-minded persons are there. Another person is there. He is also having 10,000. But we want to become member of 6-7 companies. Is it possible with my 10,000? No. But like me, if 1,000 people join hands, then it will be 10,000. It will be 10,000 into 1,000. 10,000 into 1,000. Am I clear? So this is the amount that I will have. Listening? So technically how much I will have now? 1 crore. With 1 crore, can I invest in 10 or 100 shares of all the 50 companies in the Nifty? Answer everyone. All the 50 companies in the Nifty, or at least 17 segments, each segment of one company, 100 shares can I invest or not? For example, if I invest in 100 shares of TCS, 3,500 into 100 means how much it will be? 3,50,000. I have 1 crore rupees. Hello, listening. Like this, I can invest in all the 50 companies or not? Now tell me. Like-minded 10,000 people, like-minded 10,000 money is given by not 1,000, given by 1 lakh. Are you understanding or not? Given by how much? 1 lakh. So how much it will be? 1 lakh. This is the situation. How many crores? 100 crores is pooled now. Small amounts if I collect from large group of people, because India is populous. Heavily populous country. Every person is having the phone pay today. Phone pay directly mutual fund investments they are giving. If you want to invest monthly basis, they are putting the SIP is also there. So you can directly put your money there. So it become very easy. You can invest as low as 100 rupee. You can go as big as crores of rupee. Are you understanding or not? Every month from my phone pay, personally, my personal investments, everything will be taken care by others. Motilal Oswal will do that. Okay, Motilal Oswal will do that. I have given total brokerage for them. So they will only invest, they will only sell, because I will be in class now. Then who will take care of my investment funding? So they will only take care. But personally, I will invest in mutual funds. 20,000 every month it will cut. 20,000 from the SIP, directly from the phone pay. I have given an order. They will only cut 20,000 every month. They will invest. Over a period of 5 years, how it look like? 20,000 per month. Are you understanding or not? 20,000 per month they will invest in the stock markets. 20,000 will be 20,000 will increase. Definitely it will increase. If you observe the markets how they are, tell me, Nifty will grow, will fall, will grow, will fall, will grow, will fall. But it will end of the day it will grow or fall. What is the guarantee that it will grow? Do you know what is the guarantee? Sensex is there, yeah. It will grow or fall. Always optimistic market say will be there throughout the world. Shall I tell you the reason? Reason you keep away. Shall I tell you the proof? What is the Sensex 10 years back? 30,000 or 35,000. Today, 60,000. Daily rise fall, yearly rise fall can be there. But overall, in a period of 10 years, there is a hike of fall. That's all the evidence is. Double the increase is there. 30,000 became 60,000 directly. Always remember, markets will rise. Put some leap of faith. If you do intraday trading, I can't give a guarantee. But if you are a long-term investor, your money will 100% grow if you put in stock markets. You can't give that guarantee in real estate. You can't give that guarantee in gold market. But you can give that guarantee in the share market, because share market is a sensitive market than gold and real estate. The people's sentiments are more affected in that. Are you understanding or not? Because people feel sentimental. Means today is not a right time to buy, means they will not buy. Today is a good time to buy, means they will buy. So like that, people are always sentimental. But gold, it is not like that. If a marriage is there, whether good or bad, they have to buy. If marriage is not there, even though good day come, they don't buy. All markets will not be alike. Are you understanding? And people are having wrong notion. They are thinking that sovereign gold bonds means gold investment. Antakanna full world will not be there. Sovereign gold bond is a gold investment. You know, have you heard about a sovereign gold bond? Sovereign gold bond, what will be there? Gold investment. Gold you are investing in a sovereign gold bond. And gold means gold directly. Sovereign gold bond, gold will be the security. Gold will be security. RBI gold will be the security for that bond. Sovereign means government. Government gold bonds. You are not investing in gold. There is no link with gold at all. It is a government of India bond. RBI will issue that bond. Are you understanding or not? Security is the government's gold. If at all RBI could not pay, from where they will pay? From that they will pay. There is nothing to do with gold. It is not at all gold. People are thinking that, okay, sovereign gold bond means gold investment. No. They are thinking gold in document form. No. So sovereign gold bond has nothing to do with the gold. Security given by the government is in the form of gold. Are you understanding? Sir, okay. So main point, tell me. How much I have in my hand? With the 10,000 I can't do anything. But 10,000 rupees with the 10,000 persons. 10,000 rupees with 1 lakh persons, how it look like? Big amount of 100 crores is pooled or not? Tell me, with 100 crores of money on hand, can I invest in entire Nifty stocks or not? I can invest 1,000 shares now. That's what mutual funds are doing today. Are you understanding or not? SBI mutual funds will be there. Large cap, small cap, mid cap, bank Nifty, like that various things they will open. Do you know what is the opening value? 8,000 crores, 15,000 crores, 20,000 crores, like that it will open. How they are getting that money? Do you know why? All SBI banks will force their customers to invest in mutual fund. Okay? How many customers are there for SBI? Crores la customers are there. Are you understanding or not? Crores la customers are there. When crores la customers are running, lakhs la at least they will invest. Crores la accounts opened, at least lakhs la they will invest in mutual funds or not. That is enough for them. Huge money will be pooled. For you saving, for the bank money is still there with them. Are you understanding the point or not? So that's how they are doing. So in India, the advantage is the population. Huge population, small amounts will lead to a big ocean. Listening, tell me, how much I have? Like me, 1 lakh people joined hands. Okay, how much money is pooled? 100 crores is pooled. Can I invest this 100 crores in the Nifty? Best stocks. I can select and invest 10,000 shares of each stock now. 100 crores means. Are you understanding or not? I can invest in the share. Like this, I will distribute my amount over 20-25 stocks. I can create a mutual fund. Okay? Now tell me, what is the mutual fund value? Answer. In this 100 crore, you gave how much? You gave how much? I gave how much? Then answer my question. They will not give us shares. They will give us units. Who will give? Fund house will give us units. Par value of each unit, they will decide at, example, 100 rupee. How much? 100 rupee. How much is the total amount? 100 crore. Each unit value means how many units are created? 1 crore units, 100 rupee each, 100 crore rupee raised. Listening? Now tell me, how much money raised? How many units given? Answer. Each unit cost 100 rupees. Okay? Now tell me, you put that 100 crores in the market. This 100 crore will be 100 crore, will rise. Will rise, will fall. Whenever it rise, NAV will rise. Whenever it fall, NAV will fall. NAV is something which is calculated on a daily basis. Calculated on a every day. Mutual fund house will close all their investments. All their mark to market. What is the concept name? Mark to market. For example, tell me, how much money raised? 100 crores money, I purchased 20 stocks, not 20 shares, 20 company related stocks I purchased. Each stock, some stocks 1 lakh shares I invested, some 5,000, 6,000 I invested. Totally how much I put the money? Answer. Across how many companies? 20 companies I invested. Listening, those 20 company share prices will either rise or fall during a day. Correct? I will revalue them. Market la what price is there at the closing? At that price I will close my mutual fund value. NAV will be calculated or not? That NAV divided by number of units is called as NAV per unit. That NAV per unit will be used for the next day's buying and selling of units. Today's NAV I will buy today na tomorrow na? Tomorrow. What is the date today? 9th October 2023. Today's date 9th October 2023. Today NAV will be calculated. Today's NAV calculation will be done after the closing market hours. Market closes at 3:30. 3:30. Maybe 5:30, 6 at that time, they will announce a NAV for today. That will not be used for today's units. That will be useful for the tomorrow's units. Listening. Tomorrow he came. He wanted to invest money in the mutual fund. Listening. He wanted to invest. At what price he has to buy? At the NAV of the closing date of the previous year. Understood or not? Previous day's opening or closing? Closing. You have to buy for tomorrow. So what rate will prevail in the tomorrow's market? Today's closing will be used in the tomorrow's NAV market. Are you understanding how the mutual fund works or not? So Today's NAV we will not use for today because that will be calculated after market hours close. Then what you can do in the today's market? Today's NAV will be used for tomorrow. Tomorrow's NAV used for day after tomorrow. Understood the concept clearly or not? Number one over. Like this, mutual funds will work. Okay. So mutual funds la one person, pool of persons. Pool of persons will come, put their money. One person will take care of entire investments. They will put money in the market, get the returns, give back to the unit holders in the form of NAV. In the form of NAV. NAV will grow, NAV will fall. Every single day, mutual fund house will calculate the NAV. Once NAV is calculated at the end of the day, that will be useful not for the transaction of that day, that will be used to transact for the very next coming day. Understood the point clearly? This is another point that I want to tell. Next, how mutual fund house actually work. Already I said this, see here. The greatest advantage of mutual funds, the number one is professional management. Who will manage? AMCs. Sir, tell the names of some AMC. JP Morgan and Chase. One. Second one. Tell one name if you know. In those are all small here. Indian based, na? Those are small. Foreign, these are very big because they are controlling global equity. Sundaram, all these are big only, but Indian based. Na? I'm not degrading India, but really in India there are no big firms like that. Goldman Sachs, world's biggest AMC. People will pray God to get the job in Goldman Sachs. One of world's biggest AMC, Goldman Sachs. Their investment portfolios are very good. Warren Buffett also used to be a part of Goldman Sachs advisory. So very, very popular. I will tell 5 names. Maybe you know all these. Number 1, Goldman Sachs. Number 2, JP Morgan. Number 3, Invesco. Number 4, Franklin Templeton. Number 4, Franklin Templeton. Okay. Number 4 is a Franklin Templeton. 5, can you tell the name? Huh? BlackRock is not into mutual fund. It's a wealthy company. It is holding the stocks of various funds. It's not a mutual fund AMC. BlackRock. I think you are very much seeing the Insta shots. BlackRock. Markets are okay. So, another company is also there. Capgemini. You might have heard about that company. The name of the company is Capgemini. That company is also very popular in this. Okay. So, these are the popular Capgemini, Capital Gemini. So, this is another AMC. These are the popular AMCs throughout the world. Like this, so many are there. But the first one always is Goldman Sachs. Very, very popular. These are the AMCs. Am I clear? So, in India, all foreign AMCs are there. Like I said, domestic AMCs are also there, Sundaram, etc. Okay. But popular ones are Goldman Sachs and all these. So, remember, and by the way, HDFC mutual funds are there. HDFC mutual fund. SBI has its own mutual fund company. Like that HDFC is having, Axis Bank is having, okay, ICICI is having, all the banks are having mutual fund because customer turnout is easy for them. You open account now, also open this. They will come now, they will tell, SIP 300 rupees you deposit, 500 you deposit, they will tell. At least in that way rotation becomes easy. Na? So all banks are operating as a mutual fund now. They will open mutual fund. Anyway, they don't do anything. If you ask manager, what is the market today? He don't know anything. Why? They are not the they only collect money. They will collect money and put that money in whose hands? AMC. AMC will take care further. They will charge commission. Whom? AMCs. HDFC mutual fund is there. That HDFC mutual funds are controlled by Goldman Sachs. Their liaison office is Goldman Sachs. That's why HDFC mutual fund works fantastically well. Sir, okay. See there. First one is a professional management. Number 1, greatest advantage of having mutual fund. What is the second advantage? You are not investing in any one stock. You are investing in diversified stocks. Even if one fall, another will rise. Next, higher returns. Advantage and disadvantage also same. Higher return will come only with higher risk. So advantages we are talking, let's see only advantage, higher return. Next, low cost management. This is very important. If you have to invest yourself, How much headache will be there for you? You have to sit to you. Sir, first thing, we will always look only about money which we are losing directly. You will not consider opportunity cost, opportunity loss. Try to understand, whatever AMC has done, if I have to do, I should stop at least 2 classes a day. Are you understanding, Anna? Per month I may lose 5-6 lakhs also in that way. So, that investment will come at the cost of losing the income here. Are you understanding or not? So, I will get that only if I lose some other source. So, you can't do. In that way, if you see, whatever you pay to the mutual fund as a amount of commission or as a fee will be very, very less. Okay, next. What is the next one? What is the liquidity concept? Immediately you can sell the units. Units, you purchase shares or units? Easily you can transfer the units. Liquidity generation is easy. Next. Highly regulated. Who will regulate mutual funds in India? SEBI. Are you understanding or not? Who will regulate? SEBI. Next one. Flexibility. I can open my mutual fund account with 5-6 mutual fund companies at the same time. Are you understanding or not? For example, HDFC mutual fund, SBI mutual fund, Axis mutual fund, some other XYZ mutual fund. I can open 6-7 mutual fund. Whenever one is performing well, I can close and put the money there. Flexibility in operations will be there. Listening? Last one. Economies of scale. Means what? If you have to invest in one share, invest in one share. On that one share you need to pay the brokerage. 100 shares you need to pay the brokerage. Here you will not pay any brokerage because you will invest only on NAV units. Who will pay the brokerage? Fund house will pay that. There is a lot of economy in investment. Listening? You may get a doubt, sir, then why they will do all this free of cost to me? They will not do free of cost. But each share headache will not be there for you. On a unit they will charge initial expenses, also called as entry load. Also called as a, we will discuss at the last to this chapter. Entry load problems also there. We will do there. As of now, remember there is a concept called as a entry load. Name lone clear na? NAV will be loaded with the charges. Also called as what load? Entry load. When you are leaving, they will charge exit load. On that also problems are there. We will do. Everyone understood the advantages of mutual fund. Disadvantages. High returns are there, but mutual funds investments are subject to market. Please offer document calculate before investing. Why they are telling all these? Returns, if they come, very good. If they don't come, you will become beggar. That also can happen. Are you understanding or not? Mutual fund investments are subjected to market risk. Please read the offer document carefully before investing. That's what they said. People should not understand mutual fund investments market. That's what he is trying to explain. No definite return. Next one, over diversification sometimes. Over diversification, do you know what is the problem? The problem with over diversification is zero profit. One area of profit came, another area of loss came. This profit will be eaten away by this loss. One profit, one loss. One profit, one loss if you get in a day. Lastly, what you are left with? Zero. Over diversification will be there. Next one. Selection problem. Problem is, 90% of the Indians who invest in mutual fund don't know in which mutual fund they have to invest. Selection basis, they will ask 2% where you invested. Blue chip. Blue chip. Blue chip, what will be there, he don't know. 100 people investing in SIP, if you take, ask them in which SIP they invested. They will not know. Sir, they know the name, na? Which stocks are there inside, ask them. They don't know. We don't know anything. Selection we will not do. We will just go on the basis of sentiment. How many people are investing in this? Let's go and invest in that. Selection. Next one. I told you just now. Taxes and loans. What tax? Mutual fund units generate dividend. Dividend is taxable. Yes. Government is imposing taxes on dividends or not? Tax. Load. Just now I told you, na? You will not pay brokerage. Correct? No doubt. But why they will do free of cost? They will add load to you. 2 types. That's all. Entry, exit loads. Next one. Units are transferable. Correct? Units are transferable. But if there is no buyer, what you can do? Transfer problem will come. For example, a mutual fund is there. Created units. It is out of fashion in the market. No one will come forward to buy your unit now. Then that will become what problem? Transfer problem of your units may come. Rarely that happen, but can happen. These are all the advantages or disadvantages. These are advantages, these are the disadvantages of having the mutual fund. Observe the parties in the mutual fund. Please read. First one, who is there? Don't see the public first. Mutual fund trust you see. Mutual fund trust is formed. In the 3 persons will be there. Number 1, sponsor. Number 2, board of trustees. All legal compliances, everything they will do. Third one, AMC. Third one, sponsor, board of trustees, asset management company. All these 3 people have to get themselves registered with SEBI. SEBI is section number 12, section number 11. If you read, you can understand clearly all these names will be there. Sponsor, trustees, and asset management company. All these people have to get themselves registered with SEBI. Are you understanding or not? So, next one. Who is the next one? Custodian. Who is the custodian? SEBI is the custodian of mutual funds. Who? Who will take the entire compliance custody? SEBI will take. Next one. Transfer agent. Units has to be transferred from one person to another person. Do you know units are tradable today? Don't know? How mutual fund units are tradable? How? There are 2 types of mutual fund that I will explain later. Open-ended, close-ended. Number 1. Number 2. What is a open-ended? Open-ended is like buyback. Close-ended is like company. Didn't understand? I'll explain. Open-ended scheme la units will increase and decrease every day. Today 1 lakh units. Tomorrow you came. I will issue new units to you at the NAV of the previous day. Day after tomorrow he came and sold his units. 1 lakh will become 1,20,000 after him. 1,20,000 after that he sold 30,000 units. 1,20,000 will become 90 again. Number of units will rise, fall. In case of which fund? Answer. I am the mutual fund house. You came. Listening. Who am I? Which mutual fund? Open or closer? Open-ended. Okay, open-ended means what? Both doors open. You will come. Give money to me. I will issue units to you. You wanted to leave. You will give units to me. I will give money back to you. You will leave. Mutual fund will do both the sides. Who is the buyer? But mutual fund. Who is the seller? Mutual fund. Mutual fund is an open-ended scheme. Close-ended means I will only issue the units. Sale, you can't do with me, you should do in the market. Those are called as the ETFs, exchange traded funds. Called as a ETF, full form? Exchange traded funds. Mean perlane clear. Exchange, which exchange? Telephone exchange. Stock exchange, they are tradable. Which one is tradable? Units are tradable, not mutual fund. Units are tradable. Like how TCS share, Infosys share, unit will be trading on the market. Listening, those are called as a ETF. You can sell at any time. Like a share, you will sell the units there. Okay, na? So when you transfer the units in the market, there should be some person who will facilitate your transfer process or not. Transfer agents. Which agent? Like share. Share will be held physically at demat account. Debenture? Answer, yeah. Like that, units also held in demat account. Therefore, depository is also involved. Who is also involved? For the operations work, depository is also involved. So, understood the whole idea of mutual funds. So, tell me, mutual fund is a trust. Mutual fund is a trust having 3 parties. Number 1, sponsor who begins it. Number 2, trustee who do all the legal compliances, board of trustees. Number 3, AMC who will do the investment decision. Okay, na? Other than that, operations, there are 3 persons. Number 1, custodian, SEBI. Number 2, transfer, unit transfer in a closed-ended fund. Number 3, depository for facilitating demat transfer of the units. Okay. All these people are attached to one person called as whom? Public. From the public, what these people will do? Take money. For that, what they will give? Units they will give. What they will give? Units they will give. So, understood the concept clearly here? Everyone, this is how mutual fund works. Okay. Before we go into the next problems, I have still another concept to explain. How practically mutual funds are working in India. Okay. I will explain. On these problems are also coming in exam. Let us see how it actually works. Okay. I will show you one classic example Maybe you can understand this. Sir, see here. A person came today to the mutual fund. Okay? He gave, visible, 200 rupee note. This is a 500 rupee note. Let's say 7 lakh is there. Bundle of 5 lakhs, bundle of 2 lakhs. How much is there? 7 lakhs. A person came today, gave a cash worth or check worth of 7 lakhs to a mutual fund. Okay, na? I am a mutual fund house. You are an investor. You came with this 7 lakh. You gave to me. I took money. What I have to give you? First, immediately, last day NAV you check. Say for example, last day NAV is 100 rupee. Simplicity sake, 7 lakh divided by 100 means how much? 7,000. How many units I have to give? 7,000 units. Give 1 unit certificate I will give. In that unit certificate I will write, you are the owner of 1,000 shares of so and so units of this particular company. Demat account directly it will be reflected. How many units will be reflected? 7,000 units will be reflected in the Demat account. Listening? Gmail ki directly will get a unit certificate as well. You are eligible for 7,000 units at the rate of rupees 100 like that, blah 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 he will give. Unit certificate will be generated. Over. Demat account la credited 1,000 units. Sorry, 7,000 units. So listening everyone? Over. How much money mutual fund has collected? Answer. In this 7 lakhs, what mutual fund will do? It observes the market on a day. You gave today in the morning 10:30. Immediately it will see the market. They observe that only one company is doing well today. In listening, how much you gave? 7 lakhs. In that 7 lakh, 2 lakh I will keep aside. This 5 lakh I invested in shares of TCS. Shares of TCS. How much is still there? This 2 lakh will be in the form of cash. You came again in the evening. You said, how my money is invested? Shall tell me, you asked. They will immediately give an answer. Shut your mouth and leave the fund house. My 7 lakh. Shut your mouth and leave. Read terms and conditions. 16th clause they will tell. SEBI 16th clause. Clause 16 in the listing clause. Once you invest in mutual fund, you have no right to ask which area they invested, why they invested. Shut your mouth and leave. You don't know how to invest. That's why you came to me. Are you understanding or not? Why you are again asking me every day how my money is utilized? How my money is utilized? How you are going to utilize it? Why you invested in that share? If this share is already there, then you invest directly. Why you came to me? Are you understanding or not? So, one of the important clauses is no objection clause. You will sign on the mutual fund agreements. In that one of the clauses, I am no way related to investment proposal. Means where to invest, when to invest. Entirely it is in the discretion of the mutual fund. Answer. Tell me, how much I gave? Answer. How much only is invested? Units will be issued for 7 lakh, units will be issued for 5 lakh. 7 lakhs ki units will be given. But investment is made only for 5 lakh. Listening, not 5 lakh here. 0 rupees they will invest. You have to shut your mouth only. Today market is very bad. Why I will invest today? I will keep that money, I will invest in the next day market. Are you understanding or not? So, try to understand clearly. There is no rule under the fund house rules that 100% you should invest only in market, cash flow you should not keep. Like that concept is not there. At the discretion of the fund house, some amount they will put in the form of stocks, some amount they will put in the form of cash. Understood the point? But the rule is within 48 hours, they have to issue the units to you. Within 48 hours. It need not be immediately. Example, I said immediately. SEBI rule says that units have to be issued to the Demat account within 48 hours. That's all. You have to give your Demat account number. If you give them, they will reflect there directly. Are you understanding the concept or not? So this is the working of mutual fund. NAV is the performance measure in a mutual fund. Whether a mutual fund is performing well or performing bad, good, etc. will be understood using its NAV. NAV, when you start 100 rupees NAV, example, it should grow every day. Maybe 1 or 2 days all may be there, but again it should recoup and it should grow. NAV is the indicator of mutual fund performance. More NAV growing, mutual fund is performing well. NAV is not growing, mutual fund is not performing well. What is the indicator? NAV. How it will be calculated? Always I told you, NAV will be book value or market value. I told you, every day in the evening you have to close your books. Okay, it is market value NAV or book value. Always NAV means what value? Market value NAV means every day all the stocks where you invested, you have to revalue them at the closing market prices and you have to calculate the NAV one more time. Okay, every day you should do that. Listening, that's called as what NAV? Closing NAV. Which NAV? Closing NAV. Okay, when the market is not working on Saturday and Sunday, that also will not work. NAV will be stand still for 2 days. Listening, everyone. Even gold is also holiday on Saturday and Sunday. At the time, trade will not be done. Trade will be done, but you can buy at the NAV of the closing day. Friday's closing will be there, that will be prevailing for Saturday and Sunday. Listening or not? So this is how these markets will actually run. This is how the concept will actually work. Okay. So therefore, with this, let us start doing the problems on the mutual funds. I think 1 hour full discussion we made on how the mutual funds will work. Okay. Let us now start doing the problems in that regard. Please take the question number 1. Read the question. First, calculate NAV from the following particulars. Scheme size 1000 lakhs, face value 10, investment in shares, market value of the shares 2500. Tell me, what we have to calculate here? NAV. Okay, now first tell me, you can copy later. NAV full form is what? Net assets value. Total assets at market value minus outside liability divided by number of units, not number of shares. Here shares are given, you leave off. Okay, so tell me now, answer. How much is the total assets at market value? 2500 lakhs. Divided by how many number of units are there? 1000 lakhs you pooled at face value of how much? 10. So how many lakh units are there? 100 lakh. What is the NAV? 25. Do this first. Okay, va? Can we do the next problem? Can we go to the next one? See the question. Consider the following information. Consider the following information. Name of the scheme, money plant, size of the scheme, 100 lakhs, face value of unit, 10, Number of units they only have given 10 lakh. Market value of the fund investment they have given already. How much? 180. How much receivable is there? 1. Receivable is an asset or liability? Yeah. So added. Next, accrued incomes, receivable incomes. Okay. Added or deducted? Added. Liabilities, how much? 0.5. Accrued expenses, liability. Okay. So tell me how to calculate the NAV now? How to calculate NAV? First, tell me, I will do here. Tell me, total assets. Tell the values directly there. 180 lakhs plus, plus 1 plus 1. How much it is? 182 lakhs minus outside liability. How much outside liability is there? 0.5 plus 0.5. How much? 1 lakh. So tell me how much it is? 181. How many number of units? 10 lakh. What is the NAV per unit? Rupees 18.1. Copy down. Rather than this, copy from the material. Okay, now completed. Completed. Can we go to the next one? Okay. Next one. Now question number 3. Very popular question in exam. Based on the following information, determine NAV per unit. Listed shares at cost. Cost, how much? 20 lakhs. Cash in hand, 1.23 lakhs. Bonds and debentures at cost. Okay, 4.3. Of these, bonds not listed and quoted are 1. Other fixed interest securities at cost. Dividend accrued, amount payable on shares, expenditure accrued, number of units, current realizable value of fixed income securities of face value 100 is 106.5. All listed shares were purchased at the time when index was 1200. On NAV date, index was ruling at 2120. Listed bonds and debentures carry market value of 5 lakhs on NAV date. Read the question properly. Okay. So see there, listed shares at cost 20 lakhs, cash in hand 1.23, bonds debentures at cost, information was given. First tell me, always we should do the mutual fund calculations at book value or market value. Cost is what? 20. This cost is 20 when the index is at how many points? That means 1200 points ki it is 20 lakh. Now market raise it to how much? 2120. What will be the value? 35.33 lakhs. 35.33 lakhs. I will do one thing. You do neatly in the book, but understanding sake, what I will do is opposite to this I will write. Okay, na? See here. Tell me the answer. How much it is? 35.33. Cash in hand. Will cash have a market value? No. Therefore, directly we can write how much? 1.23. Very important. Bonds and debentures at cost. How much is a cost? In that, how much is not listed and quoted? Answer, yeah. Not listed and quoted means they will have market value, book value, only book value. How much it is? 1 lakh. Okay. This 4.3 lakhs have become how much on NAV date? 5 lakhs. Next. So 4 adjustments you have completed. Next. Other fixed income securities at cost. How much? Answer. 4.5. When it is 4.5? When it is 100 per unit or per share, it is 4.5 lakhs. Now that index also raised it to how much? Each 100 rupee became 106.5 means 4.5 lakhs will become how much? 7? 9? 25. 7925. Okay. Next. After that, dividend accrued. Added or deducted? Accrued dividend. You have to get the dividend. Listening? How much? 0.8. Next. Amount payable on shares. You have to pay. You have to pay for the shares. How much it is? Liability asset? Liability. Expenditure accrued. Liability asset? Liability. Okay. Deduct all these. Tell the total value. 17.12. Not NAV per unit, total value. 171.2. 41.0825. 41.0825 divided by how many lakh shares? How many lakh units? 2.4. Tell me. 17.12. This is a NAV per unit. Here the only 2 new points we learned. 2 new points are when the index is at 1200, it is cost of 20. We have to calculate the cost of market value. Market value. Therefore, for 1200 if it is 20, for raised index of 1210, it will become 35.33. And next, fixed income securities also in the same way. 100 became 4.5. That 100 once you invested, that each 100 became 106 now. So 4.5 will become how much? 4.7925 it will become. Listening everyone in the class? So how much is NAV? Per share, per unit. So therefore, copy down this. Okay, completed. Can you go to the next one? So we have now completed question number 1, 2 and 3. Next, take question number 4. Everyone take question number 4. Okay, see there. First let us read the question once. A mutual fund made an issue of 10 lakh units of 10 rupees each. Tell me, concentrate properly, important. 6 marks question in exam. Tell me, how many units it has issued? How many? 10 lakh. At what rate? 10 rupees on January. No entry load was charged. How much amount is received? It invested in the investments. Like this, 80, 505, like that it invested. 5,000, 50,000 equity shares, government security, debentures listed, unlisted, like that it put investment. During the year, dividend of rupees 12 lakh was received on the shares. Means what? Where I invested, those investments start giving the dividend. How much dividend it has given? 12 lakh. Interest on all types of debt securities are received on time. These are all debt securities or not? These 3 are debt securities or not? On that interest is received on time. Okay. Next. At the end of the year, equity shares and 10% debentures are quoted 175%, 90% respectively. Whenever I say 175%, 175% on par, 90% on par. Okay, na? 175% is market value. Means what it is? How many times higher than that? 75% higher than par, or 175% on the par. Okay. Other investments are at the par. Next, find out NAV per unit given that operating expenses paid during the year amounted to how much? 5 lakh. Okay. Also find out NAV, second bit. If the mutual fund has distributed a dividend of rupees 0.8 per unit to the unit holders. This is the question that is being asked. Read the question properly. Don't see the answers. Read the question. Okay, na? Have you read? First, I gave enough time for you to read. What is your observation on the question now? What he is asking us to calculate? That is okay. What is the observation you made? Do you know one thing? First we need to calculate cash balance. In that 1 crore raised, 1 crore is not invested. Observation number 1. NAV is of 2 types. Type number 1. Okay, NAV is of 2 types. Type number 1. Stock NAV, cash NAV. Means what? Total become total NAV. NAV la 2 parts will be there. Number 1, stock NAV. Second one, cash NAV. Means stock NAV is that part of NAV which will change with the market. Cash NAV is that part of NAV which will not change with the market. Because cash don't change with the market. Market today raised from one point to, for example, Sensex at 60,000 became 61,000 points. Cash in my pocket will become 500, become 600. Will not become. Why? Cash will not be reflected through the markets. Clear? Huh? So there are two types of NAV. One is a cash NAV and the one is a stock NAV. Clear? Here if you observe, this is only stock NAV. Okay? But you should observe one thing. 10 lakh units into 10 each means 1 crore amount raised. In that 1 crore amount, how much is only invested? 80 plus 80. 88 plus 10, 98. Means how much is in the form of cash? 2 lakh. So tell me, how much cash is there?
2 lakhs.
Answer? Wrong. 2 lakhs plus dividend was received at 12 lakh. Operating expenses are there. First we need to calculate the cash balance because interest on all the securities is also received. So much calculation is there in this. First work is calculating the cash balance. That is the first work to do in this question. Shall we do it together? Keep the heading. Calculation of cash balance. Question number 4. Calculation of cash balance. Okay, first write down particulars amount. Tell plus or minus and do. We are not doing any accounts. Don't write entries unnecessarily. Just put it in a formal way and write down. Number 1. What is the opening balance? How much I received money? 10 lakh units into 10. How much I received? 1 crore. Okay? Next. In that 1 crore minus investments. How much I invested? 98 lakhs. Okay? Next. After investing 98 lakhs, what I have done next? Answer, yeah, what I have done? Received dividend. Not only dividend, received dividend and interest. Add or deduct, add. Dividend income. How much? 12 lakhs. Interest income. Sorry, interest income separately you tell me. How much is the par value of the government securities? 7%. Par value. Investment value, par value.
8 lakhs.
How much? 8 lakhs. So, 8 lakhs into 7% becomes how much? 56,000. Next. B. 5 lakhs into how much percent? 9%. How much it will be? 45,000. C. 5 lakhs into how much? 10%. How much it will be? 50,000. Okay. Now, these are all the 3 investments that we are going to make. Okay. Now, sorry, 3 incomes we are going to get. Total 560, 56, 45, 50. 1 lakh? 51,000. These are all the interest incomes. Up to here, everyone understood the adjustments. Minus what expenses are also there? Operating expenses. Tell the operating expense how much?
5 lakhs.
Deduct, add, deduct. Tell me now, what is the NAV? Sorry. What is the closing cash balance? How much? 15 lakh 15,000. 51,000. 15 lakh 51,000. 10 lakh 51. This is correct? How much? 10 lakh 51,000. This is NAV or cash NAV? This is the cash NAV only. We have to calculate the total NAV and then we have to recalculate the NAV per unit. Shall we do that? Write down. This is the step number 1. Step number 2. Calculation of NAV per unit. Okay. First tell me one by one what are the 4 investments they have made? Equity shares. They are traded at what percent? 175. What is the par value? 100. What is the par value? 100. 100 is traded at how much now? 175. So 175 into 50,000 value. Huh? 82 lakhs, huh? 87 or 82? 7 lakh? Tell correctly here because I don't remember numbers. Next. 7% government securities. Tell me. They are all at par. How much? 8 lakhs. 9 or 8? 9% listed debentures. Unlisted or listed? Unlisted. Okay. Unlisted debentures. 5 lakhs. Next. 10%. This will be traded at how much percent? 90%. How much is the par? 4 lakh 50 into par anta? Par 5 lakhs. 5 lakhs into 90%. How much it is? Okay. Plus cash. How much? Is there any accrued expenses like that? No. Tell you what is the total NAV? 1 crore. 1 crore? 15 lakh? 51,000. Number of units? 10 lakhs. 10 lakhs. NAV per unit equal to 11.551. 11.551. 11.551. What is 11.551? What is that 11.551? NAV per unit. Okay. This is the answer for bit number 1. Okay. If mutual fund declared dividend of 8 lakhs. Mutual fund declared dividend of 8 lakh. Tell me everyone. If mutual fund declared dividend of 8 lakh, 0.8 per unit. How many lakh units are there? 10 lakh. 10 lakh into 0.8 becomes 8 lakh. If we declare 8 lakh dividend, market values will not fall. Cash balance will fall. What will fall? So, simple, easy. Cash balance of 1051 will become minus 8 lakhs. Now, how much it will become? 2,51,000. Correct? How much? 2,51,000. So, tell me. Second bit. Revised NAV. Revised NAV. Tell me revised NAV. Instead of 1051, add 251 and tell. 87,50,000 plus 8 lakhs plus 5 lakhs plus 450 plus 2,51,000. Ah, 1 crore 7 lakh 51,000. How many number of units are there? 10 lakhs. So what is the NAV per unit? Rupees 10.751. Did you understand how we are doing it? Easiest way, shall I tell you? How much per unit you are reducing? 0.8. Directly reduce from this. That is another way. 11.551 minus 0.8, 10.751. Clear? But exam slide is better always if you do in a total way. That's why I am doing like this. Actually, that is also correct only. In exam, you can do like that. 11.551 per unit. You will reduce 0.8 from that per unit. You will get 10.751. Okay now. So what is the problem we completed now? Question number 4. Tell me everyone, understood all the 4 questions we have done till now? Understood all the 4 questions? Let's take 5th question. Take question number 5. A mutual fund raised 100 lakh on April 1st 2009 by issue of 10 lakh units of rupees 10 each, 10 per unit. The fund invested in capital markets and built a portfolio of 90 lakhs. Initial expenses are 7 lakh. During April 2009, fund sold certain securities cost 38 lakhs for 40 lakhs and purchased securities worth 28.2 lakhs. Fund expenses are rupees 4.5, of which 0.25 lakhs are in arrears. Dividend earned 1.2 lakh. 75% of the realized earnings were distributed. Market value of the portfolio on 34/2009 was 101.9. Determine NAV per unit. This is the question that is being asked. Read the question first. Okay. What is the new thing you saw in this question? I told you in our book every question has some new point. What is the new point you observed in this? Huh? Buying and selling. Okay. Because of that, what will happen? Oh, okay. Next. Again, cash balance a problem. We have to calculate the cash balance again. Okay. Previously, in the previous question, dividend income is there. Previous question, dividend income. How much dividend income? Answer. Here, capital gain income is also there. That's all. That's a new point. Along with dividend income, what income is also there? Capital gain income is also there. Okay. This is the point. So first, let us try to understand mutual fund, how they are working here. First, how much money was raised? How much money was raised? 100 lakh means 1 crore out of 10 lakh units. Okay, na? First we have to calculate what? Cash balance. Let's do that first. Question number 5. Question number 5. Tell me answer. First, one by one. Step number 1 is what balance we have to calculate? Cash balance. Particulars. Amount rupees in lakhs. Let's do together. First, opening balance. How much cash we raised? 100 lakhs. Lakhs you write. 100 lakhs. In that, first, how much you made investments? See there, clearly has given how much? 90 lakhs. Inflow na, outflow na? Outflow. After that, what you have done? Initial expenses. How much you spent? 7 lakhs. After that, this is the important adjustment. After that, certain securities cost of 38 for 40 lakhs you sold, which you purchased worth how much? 28.2. That means you purchased at 38, sold at 40, and again repurchased 28.2 lakhs worth. Listening, how much is the cost? Answer 38. At what rate you sold? 40. 40 lakhs came, but you invested entire 40 back. No, how much you reinvested? 28.2. Are you understanding or not? You can do in two ways. Either take net amount and write there, or do both the transactions as two separate transactions. Risk will not be there. Listening, here what is irrelevant information? 38. 38 is irrelevant now, but for capital gain calculation that is only relevant. Listening, why NAV calculation of 38 will not come? It is a sunk cost already made. Yet answer, NAV is always calculated book value, market value. Then why I need cost? NAV 38 is irrelevant. Capital gain 38 is relevant. Listening, tell me now. Minus, sir, minus, first minus. He sold that. Sold means plus. Sale of investments. I am writing roughly. Sale of investment. Please do. How much? 40. Minus purchase of securities. How much? Negative. 28.2 negative. Next. So we gave adjustment to 40 and 28.2. Fund expenses are how much? 4.5, of which 0.25 are in arrears. Means how much only we have to write? That's all. Minus expenses 4.25. 0.25 is relevant or not relevant? Very much relevant for NAV, not for cash balance. Because NAV we will calculate liabilities. In liabilities we have to deduct it. Okay, next. Dividend is earned. How much dividend? Answer, yeah. How much? 1.2. 75% of realized earnings are distributed minus dividend paid. This you should tell the answer. Realized earnings. How much dividend I received? 1.2. Plus how much capital gain I made? 38 lakhs worth I sold at 40. Means how much capital gain I got? 2 rupees. 2 lakhs. Into how much percent? 75. 3.2 into 75%. Tell the value. 2.4. This is what dividend received or paid? Paid. Next. Tell me, what is the closing cash balance? $9.35. Others also please check once. 9.35. What is 9.35? Cash balance. Okay. Second step. What is the second step you need to calculate? NAV per unit. First, stock NAV. What is the stock NAV value given in the question? No, 101.90 lakhs. He has given in the question, yeah. Stock NAV plus what balance we need to add? Cash balance. How much? Totally how much is the NAV? Oh, sorry. This is the total assets only. Accrued expenses are there. How much it is? No, total. 101.90 plus 9.35. 111.25 minus accrued expenses. How much? Minus or plus? Minus. Tell me what is the NAV? 111. Okay. Number of units? 10 lakh units. So NAV per unit equal to how much? 11.10. If you want a correct notation, see here. Example, your presentation should be like this. Okay, so capital gains is a difference between the cost and the market value, sale value technically. Okay, I purchased at 38 lakh. When I purchased, long back I purchased. So NAV calculation ki 38 lakh is irrelevant. Clear? That means technically cash balance ki 38 is irrelevant. Okay, capital gain ki 38 is relevant because I purchased at what? 38. Sold at what? 40. Gain came today only. So 2 lakhs is relevant for calculation of what? Total cash balance calculation or total NAV calculation, that is a cash balance calculation is relevant. Clear? But technically for NAV calculation, cost is irrelevant. Listening? For calculating the cash balance, we have to take the capital gain or not. Capital gain entirely I didn't get. I purchased at 40. Sorry, I purchased at 38. I sold at how much? 40. That is true. Clear? And I immediately purchased the stocks worth how much? 28.2. So I sold at 40. 40 already what is also included? Gain is also included. Listening? What is also included? Gain of 2 lakhs is already included in that 40. Listening? So 2 lakh included. Dividend 1.2 also included. We added 1.2. See there, see the screen. How much dividend is earned and received? We added already. 2 lakh added or not added a capital gain? We added. Separately we didn't add. In that 40 capital gain is also there. That to 2 plus 1.2, 3.2. In that 70% is paid. Therefore we deducted 2.4 again. Listening? 38 lakhs is relevant or not relevant? Relevant for what calculation? Cash balance calculation it is relevant because capital gain we have to do. But for NAV overall calculation it is irrelevant because 38 lakhs is a cost. NAV is calculated market value, not at cost. Clear everyone? So this is one very important question that is given in exam already. Question number what we completed? 5. Next. 6th question don't do now. See how the question is. Let's not do now. Tomorrow's session we will take it. Okay. Now we will do another question. Question number 7. This is very easy. 4 marks question given in exam. Directly on calculator you do and tell. He is asking us the following. See the screen. Cinderella Mutual Fund has the following assets in the scheme Rudolph at the close of business on so and so date. Nairobi, Dakar, Senegal, Cairo. Number of shares, market price per share. Total number of units is 10 lakh. Scheme accrued expenses of 2 lakh 50 and other liabilities are 2 lakh. Calculate NAV per unit. Calculate NAV per unit. Can you calculate this or not? First what we have to do? Number of shares into market price per share. First you multiply these. What you will get if you do that? Total assets value you will get. NAV you will get. Correct? Or total assets value you will get. From that number of expenses accrued is how much? Deducted. Next one. Other liabilities are how much? Deducted. You will get what? NAV. Divided by how many lakh units? 10 lakh. You will get NAV per unit. On calculator you do and tell the answer. 2 lakh 50 into 20 rupees. How much? 35,000 into 300. 29,000 into 380. 20? 40,000 into 500. 2 crores. 4 crore 20 lakhs, 20,000. Okay. Now, from this, what are the liabilities that we need to deduct? 4 lakh 50,000. How much? 4 lakh 50,000. 4 lakh 50,000 will be the liability which has to be deducted from the NAV calculation. So 4 lakh 50,000 if you deduct, how much it is? 4 crore 15 lakh 70,000. Divided by how many lakh units are there? 10 lakh. Please tell the value. 41.57. Okay. You can see the workbook also for the answer. It is 41.57. That's all. So easy question only, just a basic calculation of NAV of a mutual fund. Okay. That's how the basic questions can come in examination with regard to NAV. So up to here, all you are comfortable in doing the answers. Okay. So how many questions we have covered now? 6 questions we have covered. Right? So how many questions we have covered, sir? 6 questions. Sir, in all the 6 questions, various new points we learned. Okay. Let us stop for today here because all the other questions are new questions on NAV. That we will do in the next class. Okay. But first question is a basic NAV calculation. Second question we had accruals and receivables. Third question mark to market concept we have done. Fourth general cash balance we calculated. Fifth cash balance with capital gains and distributions we calculated. Seventh one is a basic NAV calculation one more time. Up to here everyone had a clarity here. One way of doing NAVs is completed. Next session we are going to do extraordinary way of calculating the same NAVs. This problem is there, question number 6. One very important question given for 10 marks in exam. Okay, very important because information to read it will take time. So minimum 35-40 minutes it will take to solve. And after that there is another problem for us. Question number 13. Famous question, 4-5 times this question came in exam with change in numbers. That we need to do. Once you do these 2 questions, then we will settle with completion of some part of NAV. Later we go to returns of mutual fund. After that expenses of mutual fund. After that mutual fund plans. Later we will come back to the separate special NAVs are there. Those calculations we will do. It takes a lot of time to complete this chapter. Daily we can do 5 to 6 problems in mutual fund. Clear? Today how many we have done? 6. As a target tomorrow also we should complete another 6 or 7 problems minimum. Listening everyone? Okay. Tomorrow's target will be minimum we have to do 6 to 7. Not 6 to 7 problems we have to do at any cost. 7 we complete and then only we will leave. Such that I think 25 problems. How many are there? 26 problems are there. Technically if you do 7 problems in a day, at least in that way it will be completed in somewhere around 4 to 5 days. Clear? So 6 problems if you do, 6 into technically 4 to 5 days it will take. So we have to complete this mutual fund. Once mutual fund is completed, equity segment will be over. We will be going into the main hardcore segment of AFM, derivatives and forex will start. In that 11 segments are there. Not one, 11 areas are there. Sub areas, forex, currency option, currency futures, currency swap, IRRM, FRA, currency, interest rate swaps, after the derivative options, derivative futures, so many areas, almost 8 areas are there. After that lastly we will consider risk management and security analysis and we will close. But second part will take how much time it has taken to complete this. Listening, main areas are there. Sorry, okay. Anyway, everyone comfortable with doing these problems up to here. Tomorrow's session we will be calculating remaining concepts on NAV. Okay. So next one very important thing. Mutual funds calculations we have done now. Okay. Without fail, whenever you find time, open our main notes also once. You see how the answer has been presented. Cash balances how to calculate. You see here. 2 minutes I will leave you. Cash balance like this you have to do in exam. Amount received, investments made, interest received. Don't do calculations on calculator and do. In class you can do that. But presentation exam should be like this. 7% government securities, 56,000. Like that you should show, total number should come here. Dividends received, Operating expenses, closing cash balance, dividend paid, closing cash balance 2,51,000. Okay, like this you have to do. Okay, presentation should be very neat. Next, after that, second question also you do. Like this you have to do. Okay, ba? Later we have done this question, then we went to this. Tomorrow's session we'll start with question number 13 and we'll start solving the problems. Okay, target 6 to 7 problems we'll definitely complete in the next class as well. Okay, na? So let's leave for today. Tomorrow's session will continue with the remaining problems. Thank you.